If you want to achieve financial freedom and quit your 9 to 5, then you need to meet Tom. He used to work for a charity and had no experience in property whatsoever. But then he got started with a simple property investment strategy. And after 2 years, he left his job and became a full-time property investor. Now his portfolio makes him £25,000 a month in passive income. So in this video, Tom's going to explain the exact steps that he took to become financially free and the exact steps that you can take to copy him. Tom, you've done some really exciting things in property, built an amazing portfolio, but for anyone who doesn't know you or your story, could you just give me a brief summary of what you do and what you've done in property over the past few years?
Yeah, of course. So I'm a property developer and investor. We started the business 4 to 5 years ago. I'm full-time in property and we own 25 units across 2 businesses and in my own name, and we are buying 3 or 4 currently in legals, and we've got some development sites, and yeah, just getting up to all sorts of shenanigans in property and love every day. Also carrying 3 kids at home, a wife, and just having a blast while doing it.
Yeah, amazing. Now, in terms of like your approach, your strategy, you've been pretty consistent, a pretty steady Eddie. How would you describe your approach to investing in property?
My approach is vanilla, bland, repeatable is probably the better phrase, and I think that's actually stood us in good stead. It was a very deliberate ploy at the start to try and replicate, get really good at something and do it again and again and again. I think that's kind of a metaphor for life. I think it's how I like to do business. Kind of try and do it well, do it lots, and that often pays dividends over the long run.
Yeah. Amazing. And in terms of where you actually started in property, I know you've been full-time for, what did you say, 4 years?
Yes. Yeah, I left my job 4 years ago after being made redundant. And
yeah. So in terms of like where it actually started, the beginning, your first sort of property interest, where did that start?
So first property interest is probably back to about 2007, 2008, when me and my wife moved to Manchester and we were in a position to buy our first home. So I'd already worked out that kind of you add value to homes by doing little refurbs or maybe doing a bit of decorating, do some bits and pieces. So we planned basically to do our house up. So we went and bought a very tired 2-bed terrace in South Manchester, and we painted and we lived in the property and we got covered in dust and it was grim, and we promised never to do it again. But we did see that we added value. So I caught early that sort of shift that you could achieve through doing a little bit of work, a little bit of hard yards, but then you can see quite a jump in your value of your property. Didn't really see it as a business yet, but just thought, hey, well, house is worth a bit more, house is nicer, me and my wife can enjoy it, that kind of things. That's why I got started. And then I got on the investment side a few years later. We'd saved some cash. It wasn't doing very much. I was working in the charity sector, so I didn't really have a pension. And I just would, like probably so many people who listen to your podcasts and who know property, are like, property is a good thing to have in your pension. I should buy some more. So basically, it was no more complicated than that. I researched, I did some numbers, I viewed some flats, and just went and bought a flat basically in the city centre of Manchester. As a buy-to-let, first one. Didn't really know what I was doing, but just kind of taught myself as I went through. This was back in probably 2009, 2010, that kind of time. So yeah, got ourselves a little 1-bed flat. I remember asking the agent to show me and my parents round when they were up, because I was so excited about it. I just wanted to go show mum and dad. It's like, you've got to come see what I'm going to buy. It was really sad. I look back at it, I'm like, they literally don't care anymore.
Yeah.
Is there how many of you bought that? I just don't really bother. They just don't care at all. But that one, I was so excited. Yeah. And I think that first hurdle was such a big one to get over, and really set us up on our journey. But I didn't realise it at the time, because I was still working, just had it in the background, and then a little did I know it was sort of formulating ideas in my brain, sort of starting to get things going, and started to fall in love with property probably from back then. Yeah.
I mean, in terms of the personal home, you said that you obviously knew that sprucing up a house adds a bit of value, which is a pretty well-known thing across the world. But was there any more to it than that? Had you learned about property before? Was there a plan with it, or was it literally just let's buy a fixer-upper?
I'm sure as a thoroughly impressive business owner, I should be like, there's always been a plan.
Yeah.
I got up at 5 a.m. every day. I was juicing. I was making sure that I was on my 10 to-do list and whatever. But no, do you know what? It was as simple as I wanted to get to a bigger house eventually for me and my family, and I knew that I wanted to try and speed that up. So I knew that if I could get in at a lower price, spend less on it than what I can sell it for, I'm going to get there quicker in some way. And because I'm paying off my mortgage and everything else, there will be equity anyway. So I kind of that was my base understanding. So but there was no big plan. There was no financial kind of like trajectory. And probably looking back, I think I probably fell into it rather than plan to go into it. But I think so many people who buy their first home, I mean, I was early 20s when I did that. So I didn't really know what I was doing. There was no, I don't even think YouTube was a thing when I bought my first house.
Yeah, it wasn't like a strategy.
It was so I couldn't like absorb information from all these people that are saying, hey, like this is what you do, this is how you do it. So I just knew sort of people made money from property. I was going to own property. I wanted to make sure I can maximize. Yeah. So I always had that in me, that kind of maximizer, want to get things out of stuff, but I didn't have a massively clear plan. Yeah. Further down the line when we did it again. So we sold that one. We bought another one, which is the one we still live in at the moment. That was a massive refurb project. I mean, you remember that?
That was a big one.
That was a big one. So we've almost doubled our house value on that one through what we did. But we did a basement, we did all sorts, and that was way more intentional. I knew more what I was doing there about adding square meterage and kind of considering my costs. And then we've also benefited from capital growth over that as well. So.
Yeah, massively. Yeah, I find it always really fascinating when people have got into property, because when I got in, it was YouTube. There were networking events everywhere. There were podcasts and books that I could read. Well, you said that you got into your first buy-to-let as an investment. You did some numbers and all that sort of thing. Was there any education involved, or was it literally just, if I buy this flat and the mortgage is this much and I rent it out for this much, I make money? Was that literally, or there was no education process?
No education process. I think I realised as I've got older that I'm a self-starter. I'm passionate. If I'm going to get something done, I'm just going to figure it out. So I viewed 12 flats, I think, in the process of trying to buy the one. So I was just all over it. Just a couple of days off. Just popped into Manchester, booked loads of viewings and everything else. I knew that I needed a mortgage. I'd spoken to a financial advisor and he'd sorted me out with a mortgage. So I knew I had the mortgage offer. I knew that I had some cash in an account, and I knew that I needed it to make more money. And I'd done the most basic of spreadsheet that just said renting, management costs, interest costs, and there's a black number at the bottom, not a red number. It's going to make me money.
Okay, I'm going to butt in here really quickly. This might have worked for Tom, but if you're new here, then I wouldn't recommend calculating your deals like this, what with all the red tape and everything at the minute. So there's a link in the description that I've added in so that you can access my free property deal calculator.
So I think it was no more complicated than I knew. And I also understood that property goes up over the course of 20, 30 years. So I was like, well, it's a pension play here. Yeah. I'm in my 20s, save some cash, we're doing all right, so I want to try and develop that, enhance that, and it's as long as I can wake up when I'm 60 and I've got a flat that's paid off or still have leverage, didn't matter, I still wanted to own it, because it's all about the ownership for me. It wasn't about the cash flow necessarily, although it had to make sense obviously on a piece of paper. So I think I had the core, I understood the core fundamentals. I knew that I had to make money every month. I knew that I wanted to get into a place that was going to go up, and I just knew that I had to go and put some effort in. And I think that's basically what got me going. So distinct lack of education, no mentor, didn't pay for anything, just made it happen.
Just went for it. Yeah. And then in terms of a timeline, that was around 2009-10, and then you really started to kick into gear like 2021?
It's 25, isn't it? Yeah, so around 2019, 2020 is when I really leveled it up. I bought two more in that kind of next sort of few years, kind of as things just compounded. Obviously I moved on in my career a bit, I got paid a bit more, Sarah, my wife, got paid a bit more. We just kind of, things developed, you suddenly start looking at your bank and, there's a bit more left over and all that kind of stuff. And I think as long as you've got money coming in, you start to go, okay, how do I steward this well? How do I make the most of that? And just kind of, I wanted to buy assets. I wanted to make sure I had some, because again, I was in the charity sector, didn't have any pension. So that was my idea. I had salary, I put some of it towards property, a few of it into a little bit of a savings account, but basically just keep growing it. And so just things started to compound a bit. So the first one was 2009, 10-ish. I did one, I think 2016, and another one 2018. That came a bit quicker. And that kind of is how I started the process, just kind of.
Yeah, I love that, because I always talk to people about just being able to wait it out and see the compounding effect of, like you did, you just buy one. Like everyone talks about, how do I get to 10 properties? How do I get to 20 properties? Or how do I create financial freedom? But if you just start with the one, you'll learn so much, and just by owning that asset, like you say, over the long term, it will go up in value if you invest in the right area. And that's a clear example of that. You bought something in 2010, you were able to save up some money. I imagine some of that was from the rental profits you were making.
Absolutely, yeah.
Buy something else in 2016, that's a 6-year gap, and then it's only a 2-year gap before the next one, and then probably a 1-year gap before you really started to kick into gear. What was the first sort of, when you were like, I'm ready to start with an actual strategy here, I want to really start to build a portfolio. When was that, 2019?
Well, I don't think I even saw it as a portfolio. I just saw it as, I want to get money into a market. I think I was still at that level of thinking. And it's really interesting what you said there. If I just pick up on what you're saying about the time thing, I think the thing that's always stood me, even when I was working kind of in the charity sector, just as we were doing projects, is I think everyone overestimates what they can do in a year. Like they're like, I'm going to go and get like £6 million worth of property. Obviously, we're talking about property now at the moment. I'm going to get huge cash flow. I'm going to do loads of deals. I'm going to do 40 deals as well. Blah, blah, they create a massive, and then they get to the end of the year and they're massively disappointed because they haven't achieved it. But in their 5-year plan, I've always found that you massively underestimate that. However much you go, I want to be a £5 million worth of property, you'll be surprised how quickly what goes on in 5 years. If you do it right, you do it well, you do some bits, you manage cash flow, you look after your investors, you do all your stuff, you'll be really surprised where you get to. And I think that understanding has really helped me as well. Just go, you know what, I'm in for 5+. So let's set my goals and let's try and achieve them. That's not saying you don't set them, but don't let that swing your mood that you get to the end of the year and go, I didn't hit that target, but look where I've come, because you'll look back in 5 years and go, actually, I'm so much bigger than I thought I was. So that was on that point. The question you asked, I've actually just forgotten, so you have to go again.
Basically, when you kicked into gear of like, now I want to start to actually aggressively start doing this. What was that first? What was that process like, and what was maybe deal number one?
So that's a really good question, that one, because I think I didn't see it as a business until I really set up my limited company.
Okay.
So I think when I saw it as, I saw that I wanted to put money into property in the same way that I was putting some money into a SIP, I was putting some money into savings, I was trying to pay off my mortgage, I was thinking about buying whiskey, I was looking at art, as in, I just was looking at stuff going, how do I add value to my future while also getting some money now? Like, how do I do that balance? I think it's only when the tax changes start to happen, the limited company starts to come, and I knew that I really had to double down on my long-term future, because I was still in a charity at that point, that I set up my limited company. So we set up a limited company around about, I think it was around 2020. And I did it with a guy who I'm still in business with now, because I was saying to him, like, I'm thinking about doing some property. He'd done a few bits and pieces, not dissimilar to me. We've got a similar sized portfolio with about 3 or 4 properties in our own name. He was also a bit older than me. He was a solicitor. And I was just chewing it through, really, saying what's involved in setting up a company, what should I do? Again, no education, there's a bit of a theme here, just kind of figuring it out as I go. I really trusted him as well, and he gave me some great advice. We ended up setting a company, Sarah and I, to hold some of the assets. But then in this conversation, talking to my now business partner, Dave, he had some cash as well, and he was super busy. So we ended up pooling some of our resources and going into business together, which meant that we can move with cash, we can move a lot quicker and everything else. So it's funny how you go to try and get one thing done and something else comes up. And I think that's often one of the skills of business, is you go into one conversation and you realize, there might be something else behind that wall, and you just start to climb the wall or push the door, or whatever metaphor you want, and realize, actually, this guy's got some cash, he wants to invest. And actually he became the first investor. But at that point, we were just 2 guys going at it together, both employed, both doing other things. And this was before I went full-time and before I got made redundant. So, it was very much just kind of doing bits and pieces and just kind of seeing where it went, really.
Yeah. It's really interesting, because I think loads of people will listen to this and probably jump on, you had an investor on pretty much day one, so it was easy for you. But like you said, you had that conversation, and loads of people come to me and say, I don't know where I'd get investors from. I don't know how to find a property deal. I don't know how to do this or do that. And it's like, it always just starts with that. Just have a conversation with someone. Pick up the phone to an agent. Like, speak to family and friends about what you want to do. And so many people are unwilling to take that first step, that they never see the opportunities that are presented to them.
Yeah, I think that's really true. And I think often people idolize the ownership early on. They kind of say, and if you haven't got cash, you can't buy anything. Like it's a really simple, I can't go and buy a packet of peanuts if I haven't got cash. I've got to have the cash. So you've either got to get really good at asking for money and expecting that to start to happen, position yourself like a business owner, position yourself like an investor, or you have to have built it up over time. And so many people underestimate having a job. Now it's like, just get a job. Do the hard yards, turn up.
If they've got a job, they want to quit as soon as possible.
It's like, no, don't do that. Get really good at it. I mean, there's a few people on the internet that kind of pop up every now and again that I think give some really good advice. And anyone that says get a job first, learn how to earn, learn how to turn up, learn how to be led, and listen to your manager, your director, actually is a really wise person. That doesn't mean you do it forever, but actually there's something in that. If you haven't got the entrepreneurial bend and you're just trying to learn how to do something, if you're an entrepreneur and you've got ideas, ignore my advice, run after it.
There's no stopping
it. Don't stop, but then you wouldn't listen to me anyway. But if you're actually listening to this podcast to go, I want to learn something, I'm in a job, I'm not sure, double down on your job, make some money. Live within your means, put some cash aside and start to build that cash pot. Educate yourself, have a go, try and do a deal, try and sell it, try and learn that process top to bottom. Because once you've done that well, do it a few more times. And it's amazing how when you start talking to people around property, you find somebody else or you find something else. And people are more likely to back someone with money, going to back someone who's got deals, who understands the market. And it's amazing to me how many people can sniff someone that doesn't know property who don't know property. Like I've seen it. I've been networking events, but I can't get investors and everything else. And I'm talking to them as an experienced investor, and I'm listening to talk about their investment. I'm like, you don't know what you're talking about. You haven't got a clue what you're talking about. The way you're positioning yourself, the way you're talking, and it's not about the sell. It doesn't come from that. It comes from experience. It comes from understanding. And even if you've been in a game for a while, you're still going to make mistakes. And it's about humility, and it's about a courage to keep going and a discipline to keep going. But yeah, I think the best thing is just get some cash, earn some cash. That's straightforward.
Just get going.
Just get going. Like it's just be a person of action. I know you do a lot of the deal sourcing stuff, Jack, and I think if you haven't got the investor in the back pocket, you haven't got a house you can refinance, you haven't worked for. Because I went full-time property when I was in my mid to late 30s. So I already had cash flow, and you could say that I was there, but you got to understand, I had a mortgage and I had 3 kids to feed. So yes, you might say I had some asset, and yes, I did. I had a little bit of cash flow, but I tell you what, if you've got 3 kids, you'll know that that you need some cash. And a mortgage is not cheap. Because I'd done it off my old wage, and it was a big jump to go and do that. So yeah, if you can de-risk it by holding down a job and just doing some cash flow stuff, doing some deal sourcing, then that's the way to do it.
By the way, Tom just mentioned that we run a property sourcing business, so I thought it'd be a good time to quickly mention this opportunity. Now, if you're watching this video and you want to invest in property, but you don't have the time to do all the legwork to actually get your next property found and agreed, then we can do that for you. If you want more information, you can just book in a call through the link in the description. What would you say kind of your experience or your skills or your even personality, what part of you has lent itself towards what you do now?
Do you mean like what's my top trump?
Yeah.
What's your level 10? Skills, what are my level 10s?
Well, more just like if someone's thinking, I wanted to get into this, like, and they maybe feel like they share some traits with you.
Yeah.
What can they look out for? What can they double down on? And what can they leverage?
Good question. I think for me, when I look at myself, I don't see barriers. I just see things I've got to figure out, I've got to get around. I try and take on advice from people that I trust who've done it before, try and sort of talk to people. I'd like to think I'm quite personable, so I can go and chat to people. I'm not afraid to be like, hey, I mean, I think the first agent I went into when I bought my flats, I don't know what I'm doing, but I want to buy a buy-to-let. What can I see?
Yeah.
I've got a mortgage off. I walked in my mortgage off as a piece of paper that I printed out just because I thought you might want to see it. And I wasn't afraid just because I just want to see. He doesn't care. He just wants to get out. Like, yeah, come review this stuff. So I think it's it's that slight bashfulness, that willingness just to go, you know what, you might not be my long-term agent that's going to love me forever, because you'll be like, you're just going to send me some buy-to-lets. But actually, I think being willing to go and do that is actually really important, and something that I'm not afraid to do. I mean, we were joking before that we could both talk for hours and I could have a meaningful interaction with the gatepost. It's that kind of stuff. Like, I think just go and get chat, go and talk to people, just make some stuff happen. I also think my employment before taught me loads actually about, so in charity sector you have very tight budgets and things are very hard to work with, so I think I learned how to look at numbers. I also had to learn to fundraise when the promise was a good feeling. So if you give to a charity,
contribute to a good cause.
You are contributing to a great cause. You're giving something you're passionate about, and you're engaging in some grand narrative of something, which is a beautiful thing. And I love giving, and I think it's so important to have that as part of who you are. It just allows you to connect to stuff. But if you've learned how to raise money in that situation, when all you've got to promise is that's actually a valuable skill when you can sit across people. So I want to give you X percentage on this deal. Or
it's then crazy going into meetings, I bet, after doing fundraising for charities, to go, and you give me money and you actually get it back and more.
Yeah,
this is incredible.
Exactly. and I think because particularly the organisation has that before I started the business, we had to learn how to connect with people and spend time with people and keep them up to speed with projects. Actually, that skill's really good at keeping investors, and I found that's really helped me through the journey of the business, that I've got a great retention rate on investors, even if they're like, oh, I'm about to go and do this, so I need my money back, like I need to go and buy a car, but I've got this dividend payout coming in, I've got some money coming in, and actually I'll be back. Call me in 8 months' time, and lo and behold, I'll give them make a note on my diary. I'll call them. That's me making a note on the diary, by the way. That's not what that was. You can then go and ring them, and they'll be like, "Oh, it's really nice to hear from you. Yeah, I want to do it again." And it's such an easy conversation. Or you can ring them up. I've got a deal in. Are we in a position to do it? And it just really helps. Just build that network, and actually that's really important as a business owner and investor to have all of that kind of lined up. And
yeah, definitely.
I think those are the skills that have. To me, actually, I don't think, hilariously, the big skills that have made the business a success are actually linked to property. I don't always think I'm the best deal hunter. I don't always think I pull the best deals together necessarily, but I pull them together with the people that I have, with the money that I have, and the exit strategy that I plan to do, and I execute and I make it happen. So as long as I'm keep executing, like I told some people that I've just got this deal in, I'm making X, I'm making Y, I'm looking at my deals going, well, they're not bad, mine. I'm still making money from them, but that seems amazing. Yeah. But I think because I've had to go after quite a lot of deals in a quite short space of time, I can't wait for that perfect one. I have to sort of go, well, that works. Everyone gets money from this. There's a good chance that I can hold on to that asset at the end. And as long as that makes sense for me now, I'm in a position where that's actually my benefit, is to say, I don't need the cash back in necessarily. I just need to know that the asset is good. I'm making money on it. It is making sense from either a cash flow or a balance sheet. Normally, I like it to be both, and some cash back in. I don't want it just to be, but that's kind of where I've got to now, because I'm doing volume. Like I have to move quickly, and I can't mess around and wait for the perfect deal for 6 months. I've got to find a deal in 4 to 6 weeks that's got to make sense. Otherwise, the cash is costing me too much, because people now back the business. So I've got people saying, yeah, I can see what you've done. Here's X £100,000. I want a quarterly payment of X, Y, or Z, or whatever, and they just kind of discuss terms, and now they just trust the process. But I've warmed these guys up. It's taken me time to get there. It's kind of it's just a different way of thinking and looking at the business. So
I want to really help people who are listening, watching, who want to kind of take that first leap into building a portfolio. But just before I do, because you touched on it before, your first purchase was your own home. You wanted to add value and use it as a way to jump to a bigger home. We've had conversations about this before, but there's that whole argument of like rent where you live versus own where you live. And there's the Rich Dad Poor Dad book, Robert Kiyosaki, that most 90% of people who are listening probably have read or heard about.
Or aware of, yeah.
And the argument is, do you rent where you live and use the money that you've got to invest in properties that you rent out and cash flow, or do you put that money into your own personal home and start there? Now, I'm interested to hear your take on it, because we've both bought where we live.
Yeah.
And I personally think it's going to really benefit me long term. But I'd like to hear your take on it.
I think it's a really extreme take on a concept.
Yeah.
That I think when you got to understand, if I was to have a YouTube following or an Instagram following that was anything linked to my property file, it'll be like, middle-aged dad of 3 does another refurb in the same area with the same team, and it looks exactly the same.
Yeah.
That is going to be my brand. So why do I say that? I say that because when it comes to my life, I need some stability, not for me or for my business, but actually for my family. I'm not just a business owner. I'm a dad and I'm a husband. So for my wife and my kids to now go to school and everything else, they need to know that their home is secure, that some landlord isn't going to pull the rug out from underneath them, go, actually, it's been great, but I'm going to sell. So for me, it's not about the rent and live. It's about the stability of my family. And therefore, the rent where you live thing, I think, is a false flag, because I think what actually they're really trying to say is that's dead money. If you're paying £1,000 a month to be in some lovely yuppie flat in the middle of Manchester that you cannot afford and you cannot buy, that money is doing nothing for you. Now, if you're choosing to live in that flat because it opens up a business that is making you $500,000 possibly in the next couple of years, don't leave that flat. Stay in the flat, because that's not dead money. That's allowing you to be fancy free and move around. But if you're living the flat because you want to rent, when you've got the money to buy and you don't know quite what to do, actually, if you're paying into a mortgage, at least some of that money, because you've got to live somewhere, right? Unless you're living with your parents, in which case actually that's the best decision. Go and live with your parents for a bit, and just basically getting paid nominal rent and just stack the cash.
Yeah.
Like, that's actually the best advice if you're young and you're figuring it out. But I think the sooner you can get into property ownership, the better, because once you've got over the hurdle of the first, your equity stays with you tax-free. So the money that I put into that first house and the money that I put in then on the contracts and the refurb and the extra value, I just moved it straight into my next house. I did the same again. I didn't get taxed on that transfer. Yes, I had to pay stamp duty on the new property, but it's significantly reduced now, particularly in the new tax climate we're all getting used to with the new government and just taxing landlords for fun.
Yeah.
So actually, one of the massively underrated strategies is buy something that needs a refurb. Go and live somewhere else and get it done. Figure that out. Just like buy near your parents, buy near friends, agree to live on their spare room, lodge at a mate's house in their spare room for 6 months while you do the house up. Do it well, do it cheaply, do loads of the labour yourself, paint all weekends, paint at the evenings, dig up the garden, do it yourself, work hard. Get yourself that 1-bed flat, the 2-bed terrace, whatever it is, wherever you live in, do that, live in that. Because then that money is in your financial engine. You've got it.
Yeah.
And while you're working out what to do next, you're paying down that mortgage. You're paying off that mortgage. You're buying more of that property. That property is probably going up in value as well. And the work you've done, deal analysis, do the analysis that you teach on your own property you're about to buy. Right, if I buy it at that price and I spend 10 grand on that, is it going to be worth 30, 40 grand more? If the answer is yes, go and buy it in your own name. If you want to live there, even better, and make it happen.
Yeah. There's also a low barrier to entry, especially for people just getting started. I always think you talk. It's very easy to say rent where you live so you can invest your capital into a buy-to-let, but your deposit has to be significantly higher, and in a lot of cases your interest rate will be a lot higher.
Yeah, because you've got to do 25%, well, 20% loan to value. But at the moment, with the interest rates as high as they are, it's hard to make a deal stack of that. You're probably looking at 25% down.
Yeah.
As you know, there's all sorts of benefits to your first-time buyer schemes and your mortgages that are available and everything else. You're sometimes putting 5% down.
Yeah.
Now, if you're putting 5% down on a property, you're paying off the mortgage for a year, you're adding the value, and then you go and sell it and buy somewhere else. You could do that 2 or 3 times over, and you've covered all your costs. You've added equity, you've built up equity, and you've got somewhere to call home.
Yeah.
It sits within a beautiful little tax wrapper that you can utilise. So I think if you're saying what's the advice, the takeaway, what's the real meaty thing that someone could get into if they're looking, they've got a podcast, they're not sure about the buy-to-let thing, I would say just go and buy a house
that you
can fix up near your parents or a mate that you can lodge with for next to nothing, and deal analysis. Like do some sort of GDV versus costs spreadsheet that I know that you got one on your website, I think, or on
Yeah.
your socials. So
Download it, link in the description.
look at the link. You're welcome. Is that I think because if you can get that right,
Yeah.
you've got a nice house to live in. If this property journey stops there because you're like, actually, I don't like this. The worst thing that's happened to you is you bought your first house.
Yeah.
I mean, gosh, what a terrible and awful journey, Jack, you've taken these people on. You've encouraged them to buy their first house.
Yeah.
Which we all know over the course of 40, 50 years is actually the thing that helps you survive.
Yeah.
It's just having ownership of something.
Mm.
So yeah, that's why I would say don't fully buy into that advice, but see it as every bit of rent is dead. If you're renting, that money is dead money. You're not seeing that. That's never coming back to you.
Mm-hmm.
If you're paying a mortgage of the same amount, at least you're seeing a percentage of it go on to, and you're buying into an asset that's going up in value over the next 5 years.
Yeah, because it's retaining ownership of something that, as you say, increases in value. So you could do, people talk about jumping into a buy, refurb, refinance. Why don't you do it on your own house?
Exactly.
You put less down, you only put 10%
Yep.
down, or in some cases 5%. You could spend minimal amounts of money on the work. You could live in and fix it up.
Yep.
And then in a couple of years' time, at the end of your fixed term, you can remortgage out, and the uplifted value, remortgage back onto a 90% LTV, pull money out, and go in and then invest that money into rental properties.
Actually, think about the sharp way to do that is to, if you bridged your original purchase, because you can obviously bridge residential as well, not bad rates either. Retain bridge, you don't have to service it because that would be brutal. You then have you own the asset without, this is a bit more advanced, so probably not for everyone because you got a credit check and everything else. But if you bought with bridge, did the work within the first 6 months and then refinanced it 6 months plus, you could refinance to the higher value.
Refinance at a 90% LTV.
Yeah, which means you rather than 5% down, you might have, say, 10, 15% if you get the right uplift and everything else. But even if you don't, you bake in that equity. And there's a chance if you get that right, you may even get some money back in. The only thing with bridging is just something to be really mindful of is that some bridges charge interest by the month, not by the day. So just whenever you're talking to, if you're looking at that, just understand that process. Because if you're happy with the risk of that, then that's fine.
Yeah.
But it's one thing that we're always pretty careful of is just understand how the bridging company charges the interest, because you can miss a deadline by 3 or 4 days and you lose a whole month's worth of interest, which is just it's a kicker. Because your solicitor's like, I'm just going to get the redemption statement. It's like, well, could you have done it a week ago? Maybe. And anyway. Can you sense what happened in the last couple of weeks to me?
Yeah. No. Tell me about it. So jumping into some more practical advice for people who maybe are listening and think, okay, so you built this portfolio, 25 houses, they're cash flowing every month. Like, that is what I want to achieve. That's what I want to do. Winding it back to step number 1 then is buying your first property. Is having your own funds essential to do your first deal, would you say? Because you've done both. You do private finance with private investors, but you also will buy your own stuff with your own money. Would you say for deal number 1?
I think deal number 1, what would I say? Okay.
What would you advise? And then what would you do if you had to start again?
So if I started again, it all burned down to the ground, and I stood with a mobile phone and a laptop and had to build the business out again, I would just have at it, however I can make it happen. So, but from an integrity point of view, so this is why it's a tricky one. So me personally, my journey, reason why I didn't take on investor finance when I did start to scale a bit, is because I really wanted to know I'd cracked it.
Yeah.
I wanted to make sure that if I'm pulling in somebody else's money, I could honestly say I've been through a few cycles, I've been through ups and downs, I've been through tax changes, I've been through this, I bought good assets, a cash flow, and I know what I'm doing.
And if you had the capital there, you'd put yours in. Like, it's not like you put your money in because I'm not willing to put mine in. It's too risky.
It's more like, look, I've already built this portfolio. I want to scale it, and that's when I look at how people respond to me from an investment pitch, when I'm talking to people like capital, and putting money into the business, they respond well to me in that an early kind of, who are you? I'm just trying to figure you out. We're meeting for coffee, but like, are you just some charlatan who's just having a go? Or are you actually a legitimate investment entity? Can I put my trust you with my capital and my money? To say, hey, look, I've done this so far. I'm at so many properties. This is my cash flow. This is my equity. This is my yield. I've been working my own money to start up. I've now been working with investors. I've successfully paid back so many investors. All this kind of stuff. You start to see, it's almost a physical reaction. The shoulders drop. The kind of smiles come back on the faces, and you're like, okay, now we're in the conversation. So, but you can't scale without other people's money. So, with what I know, bearing in mind I've been at this informally for a few years and going at it as a business for 4 probably now, and I might haven't asked the retired question yet, like when did you retire from property? Probably retired by the end of the second year, I had the cash flow if it all just continued going to pay myself.
Mm-hmm. But if you were starting again now...
But if I was starting again with all that I know, all that I've experienced, I just would find capital and cash and leverage as much as I can, because the thing you learn about property development and investment is that the only way to get anywhere is to leverage. The only way to get, but you have to be really sensible. So let me give a little caveat to that. So when I jumped into the business full time, interest rates were like all-time low. So I knew I had a window to basically be exceptionally aggressive. I mean, we obviously didn't literally run the account to 0, but I would regularly run it to basically what we called our 0, because there's always a bit of make weight kind of money for bits and pieces. But because I knew that this opportunity to push the market as hard as I can was going to dry up, and lo and behold, we're now trying to secure interest rates double what I did when I started, and it started to come down again. So I think we will see some benefit coming back to the investor eventually over the next 2 years probably. But that was an opportunity that I had to take. So I was really heavily leveraged, and then we've been unpicking that now this last sort of 12 to 18 months to then be much more considered, because I couldn't run that fast because it's just too big a risk. I feel like I'm kind of waffling a little bit on some of this points, but I'm just trying to give an example of kind of how I'd go, is that I'd take on cash, I would leverage as best I can.
And do what you know.
And I would do what I know. But if I'm starting out and you're saying, Tom, you don't know what you know, and actually you're going to go run a property business, I'd probably find out how to get my own cash into a deal, figure that out. And that's where actually the only thing to say that is I think parents and family are a recognised source of funds, because investors are tricky to handle sometimes. You've got to know a few things about how to handle that. As friends and family gifts, every solicitor in the world goes, well, of course your parents are going to help you buy your first house, or of course there's a rich uncle that's got some cash, or whatever thing they're used to, because they see it all the time. When you think about it, they're doing X hundreds of transactions a month. They see it probably every month. Someone go, oh, don't worry, I'll put some cash up. Yeah, I'll help them out on this deal. And there's so many different ways you can structure the family investment, even to the point where if you've got a good conveyancer, you could even bake in their loan to the ownership. Yeah. And all sorts. If someone's worried about it, I mean, try and avoid that, because that gets really complicated and expensive and legal costs. But in essence, you could. Yeah. So you do your own. So you're saying if you've not got the experience, use your own funds where you can, to an extent. I think so. Or maybe work with you and a trusted family member, that if the contract for whatever reason has to be changed, will understand that if you try your hardest and it's just stacked against you, they're going to potentially rip that contract up. Yeah. Because property will take your shirt off your back if you're not careful. We've had it happen to us once or twice over the years. We exchanged on something. We thought we had the mortgage in place. It was a horrible transaction. Looking back, I shouldn't. We were getting pushed by everybody, and we should have just said, before we put our money down, enough. We were buying 4 properties. We exchanged them 3 because we had the funds in place. One was getting really tricky. We thought we had a solution. We just hadn't got this final bit of paper. We exchanged as we thought it was coming in. It didn't land the day. It landed the day after, and it wasn't what we thought it was. We ended up losing 14 grand on that house because we couldn't complete, and the guy was not kind to us. Yeah. He was not sympathetic in any way. Took our money and ran. Yeah. So my point is, what I'm trying to make is that property will eat you alive. I don't think you'd find yourself in that situation as your first time transaction, but what I'm trying to say is if you go to do a refurb or something, you've borrowed 20 grand from a family member, you've got the money in the property, but you haven't made the profits. You can't return them the whatever percentage you agreed, and all you can do is really take the money back out and give it to them. They're not going to turn around and nail you to the table and be like, I'm sending the solicitors because I want it all. They're going to go, just make sure I get my money back, please.
Yeah.
Because we're family and we're going to figure it out. Not that I'm saying you then water down that deal, and if it comes back, you start to play it off and go, well, okay, well, like, it's family. So, no, you honour your contract. But in your first deal, if you're borrowing money, borrow from the sort of person that will see that you've worked really hard, you tried your best, you showed the numbers, they want to back you. Because then if it does go horribly wrong, it's all about just getting them their money back and honour that loan above your own profit. And that's the most important thing. But I think that's, if you're starting out first, just be really I'm just always nervous about that, just taking on other people's money for the sake of it.
Yeah.
Because actually that will stop you going forward. If you want to do this full time, your integrity and your ability to deliver are the two things that will keep your business afloat. Because if someone looks and goes, oh, but I think I heard that you didn't pay them back, or this didn't go right, or that, you'll be amazed how that follows you around, particularly if you're doing it over social media, using that to leverage.
Yeah, your reputation.
And reputation means everything. So it's all about investors get paid first, be good at what you're doing, nail your numbers early on, and execute, and it'll work out.
Yeah. I want to get a bit more practical now. So you managed to build up a portfolio within the space of 2 years to retire.
Yeah, that retirement thing.
Retire because you've not retired, you carry on going, but you've achieved what people call financial freedom,
yes,
which is essentially your net profits from your portfolio from rent that comes in every month is enough to cover your living expenses.
Yeah.
There you go. So you managed to do that in a couple of years, kind of within that sort of time period, early 2020s.
Yes.
And so how many buy-to-lets does it take for somebody to actually retire?
I would suggest you stay away from leaseholds. I suggest you stick in freeholds. And I think somewhere between 5 to 7 probably gets you somewhere near that. Although the interest rates are the thing, and how you manage. So we don't self-manage, we professionally manage all of our properties, so we had to go a little bit higher.
You had to get more.
Yeah, but and also when I say retire and living expenses, we live quite frugally. I see that as quite a base level of just kind of survival.
Yeah, I mean like fundamentals, because I think, obviously everyone says that they want whatever, 10 grand a month. It sounds really sexy, but realistically we're talking about, if you were to strip back your expenses to the essentials, your base living costs, what can you live off, and how quickly can you?
So when I was chatting to my financial advisor about this point a while back, because we're looking at my SA 302s and looking at my salary, and I'm just trying to gauge always, how do I get enough on my SA 302s, enough so I don't want to get taxed too much yet, because we're still growing the business, but also I've got to fund mortgages, so I've got to look like I'm earning something. So it's a constant tension of money in, money out. Where's it coming from? How do I make sure that when I go to apply to a bank, they're looking at me with enough? And he was saying basically anything over 25k with no real debt in the background is enough typically to get a buy-to-let that actually washes its face and makes sense in an investment portfolio.
Yeah.
And I thought that was a really interesting number to have, and I'm glad it dropped in this week because I knew we were doing this, and I was like, actually that's quite a useful piece of information for people, because you don't have to have a massive salary to go and get your first mortgage. As long as it makes sense, the buy-to-let, i.e. the rent, covers interest costs, perceived management and maintenance costs, and leaves some for you that it's worth doing. A bank will go, yeah, of course, great. And you're not carrying like 20 grand's worth of credit card debt. You'll be fine.
Yeah. Loads of people say to me, how much do I need to get a mortgage? And I found that out as well. £25,000 is what you need for them to almost like get through step number 1, and then step number 2 is, does the rent cover the mortgage payments, and on a stress test, does it pass? Yeah, as long as those 2 things are ticked, you're good to get most mortgages, aren't you? Yeah,
absolutely.
Now, if someone sat there listening to the podcast or watching this thinking, okay, I've got like some money, like 80k, and they want to start getting into buy-to-lets, maybe they own their own home, not fancying doing anything too fancy with that. They've got 80k and they want to get their first deal done. It's similar to what you've been doing, the buy, refurb, refinance, and just a straightforward rent to a family, that sort of thing. What's step number 1?
Step 1, how to crystallize the process. So I normally would say step 1, obviously you've got the cash, that's a good starting point. I think you have to do a few things at once. In step 1, I think number 1, get a good financial advisor on board. Someone that can really walk you through finance, because at 80k you're not going to have enough unless you're buying sort of terrible properties in parts of the country that you would never want to own, you're not going to have enough cash. So you need to use finance.
As in, you need to borrow from
the
bank.
You need to borrow from the bank. Yes, sorry, you need to borrow. Yeah. So typically, if you're buying a refurb project, most banks won't lend on that traditional sense. You're probably looking at some sort of mortgage with a bridge element or facility or something, but normally straight bridging is the best way to go. Find a bridger. There's plenty of big banks out there that offer relatively, but they are higher, significantly higher than normal mortgage. But what that allows you is to get and do the work and get out the other side and then refinance. Then once you'll know what you can achieve from your income multiples. So your financial advisor will be able to tell you that. So you know roughly what the top value can be, what you can pull out at the top end, and then you've got to go and find a property that makes sense. So can you, in your goldmine area or in your sweet spot, or where you know the properties, where any of the agents, where do you want to buy, what do you want to do, go and see if you can find something that sort of starts to match up with those numbers. So with 80k, you want to probably have 30k for refurb, so that probably puts you more towards the 40k. Is that right? 40? No, sorry, 50k.
50k.
Yeah. See that. 50k for money down, rest for refurb. Go out and see if you can find something that needs a new kitchen, new bathroom, maybe a skim, redecoration, new carpets. So it's a bit of a dog, basically. So no one really wants to live there. Auction houses can be good for this. Agents that are just kind of just look around, see what's there. You know, put in your price bracket and typically go to the bottom end first and just work your way up. And you'll start to see the photos, dated decor, doors hanging off, all that kind of stuff. That's the sort of stuff you're looking for. And then just start viewing. Just get out there and start to meet agents. You've got the cash. You can say, yep, I've got money on deposit. I'm ready to go, ready to transact. Because an estate agent doesn't want to spend long with you. Their business is, I mean, how they're making money anymore, I don't know. Because
razor thin.
It's a crazy thing, estate agency, because basically you have to be in and out of a conversation in about 5 minutes and then go to the next one to make any money. You just literally stacking so many contracts to make money, where I think used to personal service was part of the deal. Now it's just get it sold, move it on. So they don't want to help you in the sense of like, yeah, let me hear your needs. I mean, yes, they do want to help, but it's very condensed. So you've got to know what you want to do. You've got to know where you want to get out, and then start to find the properties. Then you've got to start putting on offers, and then you move on from there through the process. So yeah, it's trying to pull together those strands of, have I got a property that makes sense with some finance that makes sense and the amount of money I have in. It's starting to create a melting pot, because if you're buying a property that doesn't make sense and you haven't got the cash for, you shouldn't even be wasting any more time on it. Move it on. Get to the next. So you're never going to have enough. It's not going to suddenly double in size. It's not going to suddenly be worth more. So get rid of it. And it's about learning that process of just stacking deals, deciding deals don't work, moving it on.
Yeah. If you've got like a 30k, if we're using that part, £80,000, 30k refurb, £50,000 for your purchase and costs involved in that, you're probably looking at like 140, 150,000 purchase price.
Yeah, somewhere around
something like that. So the areas that you've got to be looking have to be obviously facilitating that. And then it sounds like what you're saying as well, both in what you recommended there, but also how you started. Just be honest and pull the team together.
Yeah.
And pull in team who can improve on your deficiencies. A finance broker, because you don't know how to get the best finance deals. A good estate agent, so that they can pass you good quality purchases. A solicitor who can help you with the right conveyancing and support you if you're going to go through an auction deal, or it's about maybe pulling those team members together and having a bit of an unofficial team there to then guide you through that process.
Absolutely.
Really, isn't
and particularly if you're, I mentioned auction purchases, like they can eat you alive. You've got to be really wise there, because some auctioneers will take the money in exchange on your behalf. That's how they work. But you're legally bound to buy that then. And if you haven't genuinely had a solicitor look at that pack, because you have to say, have you read the legal pack? Now, if you're not experienced, you might go, well, yes, I've read the legal pack. But what you're saying to them at that point is you're willing to exchange. And you hand the money over and they're like, great, so we've exchanged, so where's your solicitor? It's like, that's yours now. And the solicitor might look at it and go, but you missed that line, and that means that they're liable for this and that. And we've had that all the time. It's too late. It's done. So always make sure, the one piece of advice that I got on auctions is, most solicitors will do like for a couple £100 normally, and once you do a few, they'll do it for free. But you got to have volume to do that. So don't expect it to come for free. unless you can, I mean, have a go, obviously, like to ask the question, but it normally costs a couple £100. They'll do a quick pack review, so they'll just skim the pack and say, look, here's the concerns.
Yeah.
Or yes, you can mortgage that, or yes, that's fine to do what you want to do. And they'll just give you that verbal, written, quick, because it's all there, they can report to you on that. And then normally if you go back and use them for the purchase, they'll do a deal on fees or not. I mean, sometimes they just keep more costs because it's a limited company and it's everything else. So
yeah, so you get your team together, start actually actioning your the next steps of going out, calling agents, viewing properties. You'd be putting in offers, and then getting something agreed, take it through the legal process, instruct your solicitor, get your finance people together, and go through. You're then purchasing something that you then need to renovate, right?
And the fun begins.
And what happens there? So you've saved your 30 grand, but what on earth? So you bought the house, you got the keys, you're super excited, you open the door and you remember you've bought a dump.
So I'm of a certain age. There's a cartoon character growing up called the Tasmanian Devil.
Oh yeah, I know.
He was a Looney Tune, and what he used to do is he used to spin really, really quickly, and it would blurred, and there's just dust flying out of this stuff, and he'd smash into stuff, and wouldn't go in a straight line, and then would stop, and would be like, something would happen.
Yeah.
I feel like, despite the fact that I've been doing this, and we've done like 28 refurbs or whatever else, and I've got my own part of my own team. It's
still that.
It's still the same. I mean, I am yet to meet a property developer or investor that has done anything at volume. I think when you get bigger, you manage somebody who manages somebody. At that point, the noise, you do insulate yourself, but if someone else is taking more money out of you, but you're like, at that point, you're working at levels that are like up here.
Yeah.
For us normal people, we're working at a much lower level where I'm still touching the builders. I'm still doing some stuff. Like even this week, we had 2 properties that we're trying to get to let. One of the plumbers, great guy, forgotten to do the silicone. So what do? Do I get him back? It's going to take me a week. Or do I just go, actually, he did a solid on the numbers because we put volume for him. So I've just got to go and do some silicone. So I just went and did a silicone beader in the bathroom. Do you know what I mean? It's that's a tiny, tiny detail of kind of like, I've got great guys who do good work, and yet still, I'm just looking at going, if I hadn't spotted that, first shower, where's all the water going? Well, it's actually a first floor flat, so all the water's going to something we don't own below.
Yeah. And
that's what I mean by the chaos. It's like, that's not anyone intentionally. It's just they were busy. They're trying to get paid. I was busy. I didn't review it in time. I paid him off because he's a great, trustworthy guy. Sent me photos and everything, but I just didn't spot that minute detail. But that multiplies over everything where you suddenly go, oh, yeah, we're working this week. You're busy. You don't pop in for a couple of days. You pop in. Well, you're busy elsewhere, like because your project hasn't moved at all. Or I've had contractors not turn up. I've had people say they've been there when they weren't paying when they haven't. It's just brutal. And you open walls up and you find that you've got to do structural work that you weren't expecting. You try and put a kitchen in one way and it doesn't work out, so you just put it in a different way. Sometimes you have good stuff, like a builder comes in and makes, actually, do you know what? If we move the door from there to there, you'll get this. I could do this, that, and the other, and actually get a better kitchen, which we had on one of them, which was a good bit of advice. So we moved the door. It cost me a few hundred more. I think it was £500-600 more, but it made the kitchen feel really nice and tidy. Because the access was just so much more improved, and goes a cupboard under the stairs and a few other bits that we wanted. So but I find the refurb is chaotic. So you've got 2 approaches there. You either go to a builder and just accept that it's going to take time, and you've got to build that rapport with a master builder who will have his own contractors who will do all the bits. Typically, you're going to pay for them a bit more, but
that's the way I go. But
because you go more like that, don't you?
You remove the day-to-day headache, but that doesn't remove them entirely.
No.
So, like, you still
have all the phone calls.
Like you say, you can still turn up and there's some silica missing. You can still turn up and they've not quite finished off the painting in a room.
You said tiles, and they'll go and try and put that bar screen stuff in, that plastic bar screen.
Yeah.
I mean, I said tiles for a reason because I want that finish. I don't want plastic walls.
Exactly. So there's a level to which it saves your day-to-day headaches, but that doesn't. I mean, whilst we've been sitting here, my builder's been hounding me about paying for a topping up a gas meter. It's just things like that. It's like because that's my job. That's what I've got to do. But it's not straightforward.
And I think the hands-off view of property that people have is a bit of an illusion, really, if you're in it day to day and you're actually running the business. I think if
you're wanting to grow.
Yeah.
Once you've got it to the point where you're like, I'm happy with my portfolio, there are certain systems in place to make it more passive.
Yeah, you can turn it more passive once it's established. You've got a good management agent and you're happy for them to send any Tom, Dick or Harry in to go and do the refurbs and to do the maintenance.
Yeah.
I'm a bit more protective because I know that eventually, even the best contractor in the world that hasn't got you directly overlooking them, telling them what to do, will not do the job as you want it done, which means that your asset slowly gets down value. But if you're seeing it as a 20-year project, you're never going to see that anyway because your value is going to go up. You're going to get your rental cash flow. It's going to be okay. Yeah. But when you get out the other end, you're going to have a lower value than you could. And I'm trying to protect my values for as long as possible by being a bit more active and definitely not taking the passive approach.
Yeah.
And even commercial leases. Like we had a commercial lease, one of our buildings, and that isn't straightforward either. People hold that up as a bit of a... Now, it's much more hands-off. Yes, it's much more kind of set and forget if it's working, but if there's problems in the building or there's problems with... They're a business. They don't want to pay for stuff that they think is your responsibility if you own the building with them. And so it's just as noisy.
Yeah. And it's also... people forget that it's not houses that give you money, it's tenants. And tenants are people. And it's just a people business.
And investors are people. And you're a person.
Yeah.
I think property is a people game more than a property game. You've got to learn property, you've got to understand it, you've got to be very sure on your cash flow and your numbers and your values. But ultimately, it's people. Yeah. It's all people, start to finish.
Yeah.
Network.
Now, the renovation side of things, I want to quickly whiz through this.
Yep.
Give me like 3 tips for somebody who goes, right, I'm refurbing my first house, what do I do? Or 3 things to watch out for.
Okay, 3 refurb tips. I would say if you can do stuff yourself, in your first refurb, that's worth doing because that saves your bottom line, but it will suck your time alive. Yeah. So I'm trying to dial this to your audience rather than kind of general advice because I'm trying to get out of doing anything on the properties because I'm at a different position. Yeah. But when I started, I wasn't afraid of. So I painted houses until 2 a.m. when I started the business because I knew that couple of grand I was going to put on a decorator. Yes, I was going to bully myself for a week, but I knew that the moment the plaster was dry, I could go straight to it, paint it, finish it, get it done to a decent enough standard that it would work. So I saved time and money. But that's because I was on a shoestring. Yeah. And when you're starting, you're on a shoestring. So if you can, what you can do yourself, but only on your first one. And if you can afford it. Because otherwise what you need to do is you need to get really good at talking to contractors about exactly what list of work. So a good schedule of work, a good scheme of work, a good list of things that you want a contractor to do. They like following a list, they like diagrams, because then you can just go, I did it. Yeah. Contractors don't like vagueness. They're not going to do the design work for you. They're not going to choose the colour for you unless you want them to choose white or grey. They're not going to decide a nice kitchen in your view. You have to still do all the design work, all the planning. They just want to turn that into reality. So they want to know kitchen in there, here's the design, I can do that. I need to rewire it, yes, I can do that. How many plugs do you want in each room? Where do you want the plugs? It's that level of detail you have to hold. So if you can get an epic list together that you can then farm out to the plumber, to the electrician, to the builder, kind of to doing the general works, to your plasterer, whatever else. And then the other thing is don't be afraid to get quotes. If you're doing it, if you're self-managing, don't be afraid to get 4 or 5 people around. Yeah. They're used to that. You have to build a bit of a thick skin to that because some people start talking to you and try and play you because they're trying to sell to you. It's their business. They're trying to sell. So they're trying to so just see what the numbers, sense who they are. And it doesn't always make sense to go for the cheapest. That's the mistake that I've made along the way. You go to the bottom line and you get an average finish, you get a poor finish, they don't turn up, they're stacking their work too high. You want to get someone that's kind of typically someone that you trust, that you connect with, you feel you can talk to, and someone that normally is actually in the middle of the cost. Like if you've got a span, I find that they typically perform better, do better work, and you get a better finish. Yeah. And then keep a big spreadsheet behind that. So I don't know if that's necessarily the best advice, but
no, it's great. I think we've gone through purchase, refurb.
Exit.
And then for you were saying for the first deal, buy something you can fix up, and then I'm guessing refinance. Yeah. So talk me through that. What is that, and how do you go about it?
So it's a relatively straightforward process because you're not going to revalue it more than what the bank says, because ultimately the bank sets that. However much you think you can get it for more, it won't happen. And I've just begun to accept it's going to be what it's going to be. So you can fight them sometimes. I've fought a few. Some people achieved it. I've never achieved the view of changing the valuer's mind. I did go and get another valuer out who said it was worth a bit more with a different bank, but I had to completely change my financial app.
Yeah. So to get a valuer out, so a bank will instruct a valuer to go value it. If they downvalue it, I've had the same thing.
You can't change the market, no.
People say, oh, you could try and apply to change their mind. It just doesn't happen. It just wastes time. So if you desperately need to change the end value, or if you want a second opinion, you're going to have to pay for another lender to come in and get a new value around.
Exactly. So I normally, because we're looking to refinance everything, so I normally get a lettings agent in as quickly as I can when we're finished, or just as we're finishing normally. I don't wait until we're finished, because they'll be able to look at it sort of in a semi-painted state and go, yeah, okay, you got this many bedrooms, you got, yeah, great, this will rent for X. You need that figure. Second thing you need to understand roughly where the market's at, because you will go to your financial advisor without the valuer knowing what it's worth yet, because the financial advisor will feed that to the valuer. So you want to make sure that if you think it's worth 210, that you're setting that up with your financial advisor to know the rent works, it stress tests, 210. So when the valuer gets their piece of paper, they say, yeah, this rent's for this much. Yes, I think that kind of works. Because then they want to sign that off, because they want an easy job. So if they think, yeah, this kind of works, you're going to stand more chance of getting it through, I think. Rather than be like, yes, it's worth 250k, because they're like, never in that area. You've already got the backup of the valuer. You want something that says, yeah, I think it could be worth that. Then go in, the valuer is going to tell you what it is. They don't talk to you. I've pushed them so many times. I've presented them a piece of paper. I've tried to be friendly. I've tried to go back to the same valuers. They are deliberately set themselves up to be as far away from you as possible. They just don't talk to you. They don't give you any feedback. You can ring them up. It's just don't waste your time. And then wait for that to come back to your financial advisor. They'll tell you we've got the loan. And then you redo the mortgage. Typically when the remortgage come in, you'll clear your original debt. Or if you've gone with only cash, you'll get whatever the loan value out, or the margins between the two loans back into your account. Yeah. You'll have a mortgage to pay every month in the same way that if you own your own home. But then the rent will start to come in, and that will clear your mortgage costs back to the bank. Yeah. And that's your start. That's how you start. So then you're making a margin on that. So every month you'll be making money. Hopefully get some cash back in the bank. Maybe by then you made some more money from your job, and you go again, and you go again, and you just...
I was going to ask the question, how do you go... So for people who think, right, I'm gonna do this one, or maybe they're halfway through their first purchase, they're thinking about getting into number one, but maybe they're like quite futuristic. They're thinking, how do I get to 10? And it really is, how did you do one? How did you get as much money out of one once it was done? And then how did you do it?
Well, and also it's about holding it. So I did my first couple. We did well, but we didn't do as well as we could have. Looking back, I'm like, man, alive! If I had those again, we would have done it so much better. Yeah. But because we were looking to recycle it and hold it, I mean, we bought one property in the business for 117k. I think we spent 10 grand on it. We've had it 4 years, I think, and we just put it to market for 190. Because we've got a deadline with an investor coming up later on this year, and it's kind of had its day. It's a nice house, but it's not one of the best ones, and would rather keep the cash flow alive. Just get rid of one of, we don't want to save everything coming out of the rental portfolio and to pay the investor back. We'd rather clear the house off. Just get them paid off early, get them out of the way, because that makes sense with our numbers over the next couple of years, because we've got a few deadlines coming up with our investors in one of the businesses that we need to make sure we hit. So, yeah, it just makes sense to sell it. So it's done. And the other ones, some of them are doing better than that as well. So,
yeah, it is a rinse and repeat where possible, isn't it?
Yeah, and if you can get money, the other thing is we've managed to get money on for like 3 to 5 years now. That cycle now means that people are with us for those cycles, and I think that's going to pay dividends for us over the next couple of years. So definitely. Now, just a quick answer to wrap up. I'll try and be quick.
Yeah. What's the future look like? What's the next few years look like?
I think the property market. So let's do market first before I talk about me and what we're doing. I think we've got an interesting couple of years ahead. I think there's a lot of costs being passed to the investor and being put onto the landlord. I think a lot of people are looking at how to get into the limited company area, so they own them in a different way. Interest rates are quite high still. Property values have been flat, but I think they're going to grow a bit. I think inflation has been exceptionally high and now is tapered off, so I think that's going to roll into the market. So I think we're going to see values go up a bit more. I think rents are tapped out. I don't think people can afford much more. I think it's in massive growth, so I think rents are going to flatline for a bit, but be really good. Like, I think you'll always get things rented, and I think it's a good time to get in, because I think some people are done, and particularly people that have been in for a while,
I heard a fact that 40%
old
of
landlords
are getting out.
Which is bonkers.
It's crazy number of people.
The population growth.
Yeah.
Someone said we'll be at like nearly 8 in like 10 years' time. We'll be nearly 18 million, I think, as a country. And it's like, where are they going to live?
Yeah.
You're getting rid of the landlords. Not everyone can buy. So anyway, I'm going to get my hobby horse. Not careful.
Yeah.
But point is, I think as a country we still have opportunity in bricks and mortar. I think that we're incredibly stable as a country as far as the value of houses goes. So I think if you can buy at the right price and you know your top values, I think there's still money to be made in the market. But I think you've got to be good and you've got to be professional, and you can't do it sort of on half an hour a month just because I've always had property. Like, you've got to take it seriously. You've got to get your checks in. You've got to be, checking that there's not. I mean, one of the things that I noticed on my letting agents thing that came through, that they're checking to make sure that there's no illegal immigrants living in the property as part of their declaration. I'm like, wow, that wasn't one thing when I started. All these little bits and bullet points and content. I just noticed this paragraph had snuck into their reports when they do the interim reports come back in.
Yeah.
And I was like, wow, they must feel like they need to declare that they went to cover their backs.
Yeah.
That I'm not harbouring in my portfolio extra people who we don't know exist.
Yeah. Yeah.
And I'm like, I didn't even realise that was a thing for me as a landlord. I mean, obviously, like, I want to know who my tenants are. We've got the identities, we've got the deposits, we've got it all checked out, and we've got done basic AML. But for that specific stuff, it's just the market's getting more professional, so you need that support. And then for us as a business, we are capitalising at the moment, so we've got a lot of big asks out to some of our investors. We're doing an office conversion into 3 flats, which starts next week, hopefully. We've got 3 or 4 properties in legals, and we are exploring quite aggressively, working in the housing association market and doing some bits with charities and organisations that are helping some of the most desperate and the most needy people of our world. So desperate to get a part of that and kind of just bring some of our assets, long-term assets, into that and just say, look, make a difference with it, because I think it's where the real benefit of running this business is for us. So I've got a few bits on, but it's been great to be here. So thanks for having me on, Jack. I really appreciate it.
No worries at all. It's been really insightful. I think loads of people will have found this really valuable, because there are so many people out there saying you can achieve this wild thing of like 50 grand a month in 4 weeks, and just some ludicrous things. But hearing your story of like over the long haul, just taking those necessary steps, taking the right steps, and pulling in the team that's needed, and just doing the stuff that needs to get done, the simple stuff well, and over a long period of time of just consistency, has really paid dividends to you. And I think people will take a lot of value from this podcast. I always find it interesting that whenever someone messages me saying, I've got a mate looking for a rental property in Manchester, do you know anyone? I always refer them on to you, because I know that your standard of rentals are really good. You look at the rental market at the minute and it's pretty abysmal, and people are able to charge a fair amount of quite a lot of money for something that's pretty bad. But you have always gone above and beyond on all of your properties, and I always think that is a testament to you and your character. And I think if people want to take inspiration, then they can definitely look at you as someone who's done something
appreciate that
really amazing. In case people are watching, they want to connect with you in any way, how can they find you?
Great. So I do have socials, but I'm pretty terrible on them. So the best thing is go to my website, which is we're Greenhead Lane Properties, which is www.ghlp.co.uk. Love to hear from you. If you are thinking about investing and you don't want the hassle, we work with investors and would love to work with you. Or if you just got some questions off the back of the podcast, love to answer them in person if I can.